Foreign institutional investors have sold more than 3.3 lakh crores. Not too long ago, the biggest concern was whether AI would reduce demand for traditional IT services. In July, the Nifty IT index jumped 16.7%. Every time the market falls, people ask the same question: is something wrong with India's growth story? And every time the market rallies, people ask another question: have I already missed the opportunity? Here is the interesting thing. Despite global uncertainty, foreign investor selling, and concerns around oil prices, some sectors are starting to look more interesting than they did a few months ago. And one of them might surprise you. This video is for relatively long-term investors who want to understand the current market landscape and are looking for large cap, mid cap, and small cap stocks to invest. We will zoom into what changed for Indian stock markets in July, which sectors are emerging from the market noise, and what is our verdict on investing. We will answer these questions for you. Why domestic buying is offsetting foreign selling? Why valuations remain reasonable? Why sectors like IT and specialty chemicals are back in focus? Let's dive into it. What's keeping the market resilient? Let's start with a number. Foreign institutional investors have sold more than 3.3 lakh crores worth of Indian equities so far in 2026. That's a significant amount of money leaving the market. Normally, you'd expect that kind of selling to put markets under serious pressure. But domestic institutional investors have largely absorbed that supply through continued inflows. There's another data point worth paying attention to. Despite the market's recent gains, the Nifty's forward PE stands at about 18.5x, below its 3-year average of 20.4x. In simple terms, earnings are supporting the markets. Valuations haven't run widely ahead of fundamentals. That's one reason many investors remain constructive, even though risks haven't disappeared. And there are still risks. Oil prices, global bond yields, currency movements, and geopolitical developments can all create volatility in the months ahead. Now let's talk about IT. Not too long ago, the biggest concern was whether AI would reduce demand for traditional IT services. In July, the Nifty IT index jumped 16.7%, making it a strong performance. Why the sudden change in sentiment? Because businesses don't switch on AI with the press of a button. They need modern technology systems, clean data, security framework, compliance system, and implementation support before AI can be deployed at scale. That's creating opportunities for IT service providers. The sector may still face growth challenges over the next couple of years, but investors are increasingly viewing this as an evolution of the business model rather than the end of it. That's one reason a company like Coforge continues to feature among preferred ideas. While everyone's discussing AI, another sector has quietly been delivering. Specialty chemicals. Recent results showed strength in fluorochemicals, refrigerants, and CDMO businesses, helped by strong demand, long-term customer contracts, and better pricing power. What's particularly interesting is where some of these companies are headed. They are moving into higher value areas linked to semiconductors, battery materials, and advanced specialty chemicals, where entry barrier tends to be much higher. That's very different from commodity chemical businesses, where profits can swing sharply with supply and demand cycles. Where else are opportunities emerging? Beyond IT and chemicals, a few themes continue to stand out. Banking and financial services remain closely tied to India's long-term growth story and continues to be amongst the preferred sectors. Infrastructure and capital goods remain beneficiaries of ongoing investments, activity, and India's broader development story. Pharmaceuticals continue to look attractive. because of relatively strong earnings visibility and structural growth drivers. And within sectors like telecom, energy, and IT, the focus remains on businesses where valuations are supported by earnings visibility. On your screen now are the month's recommended stocks across large caps, mid caps, and small cap category, along with their target prices. You can use this as a starting point for your further research while keeping your own risk profile and investment goals in mind. Do you want to know more about these stocks and why we back them strongly? Join the WhatsApp channel of our research center for in-depth reports and insights. The link is in the description. So what's the takeaway? India's growth story isn't being driven by just one sector or one theme. We are seeing support from domestic demand, infrastructure spending, banking, healthcare, manufacturing, and now a renewed interest in parts of the IT sector as well. That doesn't mean volatility is going away, but it does mean investors may want to spend less time reacting to every headline and more time focusing on businesses with strong fundamentals and long-term growth potential. And here's my question for you. Which sector do you think will be biggest winner over the next few years? Financials, IT, pharma, infrastructure, or specialty chemicals? Let us know in the comments. And if you found this useful, don't forget to like, share, and subscribe.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.